Yes, thanks.
All
Thanks,
right,
Brian.
I'll put it in this resolution from here on out on this crazy wide monitor.
All right, cool. Sounds live. Okay, we're live, guys. We're just setting up a few things before the stream officially, quote unquote, begins. Gary, if you don't mind paying attention to our YouTube stream and getting back to us here on the call if anything goes wrong. And I think we are good to go. All right. So, hello everyone joining us. Welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members come around and discuss the recent crypto market events. And there's a lot of things to discuss today, obviously, given the last 24 hours of action. But what we're going to be doing is we're going to be talking about the market from a more of a fundamental perspective. So if you haven't used Santiment before, there's going to be a link in the description of this video, and check out app.santiment.net also during the call as well. Over the last 3 years, we've developed dozens of tools and custom metrics using a combination of on-chain data, social media data, and development activity information. All of this is with an idea of helping people better understand the crypto market from a variety of different angles and understanding the behavior of different market participants. So definitely check out app.santiment.net because everything that we're going to be talking about today is basically included in our platform. Also, if you don't want to wait until next week to join the discussion on these types of issues and topics, join our Discord. The description is also, or the link to Discord is also in the description of this video. We talk about this type of stuff pretty much every day in our trading channels. So just join us there, and we'll be happy to kind of talk about any specific coins or market setups that you're seeing as well. So the topic of this video is analyzing Bitcoin and Ethereum's fundamentals after the dip. So what we're going to be doing over the next 30 minutes or so is first we're going to be looking at a bunch of different on-chain and social metrics and indicators for Bitcoin and Ethereum. There's a lot of interesting developments over the last 36 to 48 hours, some of it happening even before the dip. So we're going to be looking into what the latest fundamentals are saying as far as where we are after the latest market correction, and then we're going to be taking some questions from the audience. So any type of coins or market setups that you're interested in and you want our opinion on it from like an on-chain perspective, social activity perspective, anything that we can kind of shed an additional light on, let us know in the chat, and then we're going to get to it probably about 30 minutes from now when we're done with talking about Bitcoin and Ethereum as far as what we've got prepared for you. All right, that's pretty much it. So without further ado, Brian, I think you're already sharing your screen. So if you want to start us off, go ahead, friend.
You bet. Thanks for the intro, Dino. So welcome, everyone. What we are looking at is our usual start to the stream template, which is our top 100 asset comparison model. What we're looking at are the past week returns of the top 100 blockchains, and 74 of the 100 were in the red this week, as you may expect. Obviously, the start to the week, Monday and Tuesday, were green days, and we had tokens like Ethereum that actually were surging. We got up to about 485 at the start of the week. It's crazy to even say that that was only about 4 days ago, but that's when it happened. And then it immediately sort of retraced, and then Bitcoin retraced, bumping all of these altcoins down along with it. And then yesterday was another major red day where it had two big corrections after it looked like it was slowly starting to recover. Where we are now, we're in that 10.4K range for Bitcoin. A lot of altcoins are starting to give back their profits, as Dino and I have been kind of predicting the last couple of weeks, due to low daily active addresses and decreased token circulation. You can see a few exceptions here. Sushi, of course, with their Binance listing, they went up 105%. Wi-Fi is just continuing its unbelievable tear right now, and you can definitely check out more about it on our insights page with our resident DeFi expert, who's giving constant updates about what's going on with Wi-Fi and other related DeFi projects. A few other notables, we had Tron jumping up about 56%, UMA, which was in our top 10 development activity countdown that Dino recently put out yesterday, and gives a lot of good information about what they're up to, as well as the other 9 in those top 10. you can see, hold on. Okay, so we do have two different Wi-Fis. We have Wired Finance here, and then this is the Wi-Fi YFII. So excuse the correction on that one. This was Wi-Fi 50.2%. This was the Wi-Fi with an extra I. So keep that in mind. Both are doing well, especially the extra I Wi-Fi right now. And then another notable was Cybervein, which honestly I can't give much info about, but some of you may know more than I do. Moving on to Bitcoin fundamentals here. So we're looking at the daily active addresses and social volume. Let me full screen this really quick. Better. So orange bars here are daily active addresses. Blue is the social volume. You can see that blue has sort of fluctuated and it's on the lower end now. I want to highlight it by itself here. What we can see is that social volume really started to peak right as we were rising up to 11K back on July 27th. Since that time, we had a few major spikes. Of course, our last major spike corresponded with the 12.25K top. This is pretty normal, guys. When you see tops forming, that's generally coinciding with the crowd getting overly euphoric about it and telling everyone that it's time to buy in. If you're not in now, you're crazy. Memes saying, imagine if you're not invested in Bitcoin now, all sorts of things going on. And that's exactly what happened at the top of 11K and at the top of 12K over the past few weeks here, actually last month, excuse me. You'll also see major spikes on huge dips. So when we had, for example, the Black Thursday dip, that was our second largest spike after the 11K surge that we had in late July. So this one came with bunches, meaning there was constant chatter about it for hours and hours, or days and days, that is, as opposed to one singular spike that correlated with the top, followed by a quick downswing and then lower social volume. So keep that in mind because social volume continues to be a great predictor, not just for altcoins, but for the major assets like Bitcoin and Ethereum too, as far as predicting when direction changes are about to occur. Very similar to token age consumed, which I'll talk about at the end here with Chainlink. Looking at daily active addresses, I'll just remove social volume for now. We are still seeing a long-term rise, right? So over the past year, which we're looking at, the daily active addresses are definitely moving the right direction. So people who think we're about to drop all the way back to where we were in Black Thursday, just after this 10%, 20% correction, it doesn't look like fundamentals are indicating anything that scary happening. But it was, if you've been tuning in for the past few weeks, it was predicting that we would have a mild correction because daily active addresses need to constantly be keeping up with price. And we were seeing, I'll zoom in here to just the past month. Yeah, so we were seeing that as the price was topping and it got all the way to 12.3, DAA wasn't keeping up with that, right? We had our peak at 1.13 million daily active addresses on the 6th. And since that time, it's mostly stayed flat, where we had a few that kind of hung around the 1.09 million daily active address threshold, but never went above where it was in early August. And in fact, if you drew a trend line right here, it would definitely kind of be going down like that. Whereas price was going like this, right? And it kind of dipped, tried to recover, but the trend of DAA was already going downwards, right? So this is important to really understand. And my DAA model kind of illustrates it better, and I'll jump into that in a second. But I really want to give people an overview of how important it is to just have DAA for any asset keeping up with its price. So if you see price going like this and DAA going flat or downwards, that's not going to be a sign that it's going to sustain itself for a long period of time. So looking at the DAA model, here we see Bitcoin. What this is measuring is the divergence of the average daily active addresses, subtracting the average of the price during the 4-year time frame that this model is using. Now I'm only displaying the past 6 months or so, but it's using 4 years of data to compile what is really considered the average, basically expected daily active addresses that should be occurring at any given price. So as we can see, we had an abundance of bullish signals happening in Black Thursday that started to diminish, but it was still green right up until it flattened out. And this wasn't, pasted in hindsight. This is what it predicted. And right when it started to even out, that's when you started to see kind of a mix of red and green, which is what you'll typically see when you're in a ranging pattern. And we were here at about 9K to 10K for quite a long while, about 2 months. And then as we started to rise up to 11K and 12K, that's when we started to get these neon red bars, because going back to this, we weren't quite rising at the level we should. We started to top out here, even though price pushed all the way up to 12.3 and DAA didn't follow. And that's why when we got to 12.3, if I single that out, it actually closed at 12.25, but the top of this day was 12.3. That's where we got basically our biggest bearish divergence, predicting that that was the local top, and it started to decline there. Tried one more push up to above 12K for a second back on Tuesday, and then it had its drop because all of these red bars were basically predicting that we were overly inflated based on a more 10K-ish type of daily active address output. And now that we have dropped, we're seeing our first green, meaning a dip buy is appropriate according to this model. We're seeing our first green in what looks like over a month since July 26th. No green anywhere since that time. So that's a pretty good snapshot of what's happening right now for Bitcoin. Basically, correction allows the daily active address output to sort of catch up to what's happening with price. Alternatively, sometimes daily active addresses might look low, and then you'll see a sudden explosion in DAA to some sort of event or upgrade in an asset's backend or GitHub or some announcement. In this case, price simply corrected down to what the appropriate DAA was, and now the model has already sort of bounced after yesterday's close of 10.2, and it's up around 10 point, the mid to high 10.4s right now. Looking at Ethereum, we see that we're also getting our first bullish signal since August 6th, so just about a month ago. This one has been more interesting. You can see it's really been uniform, where it went bullish for about 4.5 months straight. And then all of a sudden, when it started to jump over 400 or even the high 300s, that's when we just got huge red bars that were basically the largest red bars in the history of Ethereum, going back to its launch in 2015 publicly. So we can see here it actually got up to about 450 before closing at a high of 437 back here, and we had a very big red bar saying a correction was going to happen. Ethereum traders did not want it to drop this far, and there was quite a bit of dip buying happening at the end of August. And then when we got up to 485 and it closed at 477 this day, that's when we got our largest bars here. Actually, on the way up is when we got our largest, and then we had a few more neon reds right here. And the model predicted correctly that we were going to retrace. And once we hit last night's close, we got our first green bar coming in today. It's basically saying we're just barely in bullish territory based on where DAA is looking. And I'll illustrate that on Sandbase really quick. Oops, sorry, this is actually my gold and S&P comparison that I'll show next. We do it on this one. Yeah, so this one's even more striking in my opinion, because we had this huge jump right around the beginning of August, just like the model showed, and that's when DAA essentially peaked and it plummeted. We actually had about a 2-month low, which we reported on Twitter for DAA right here, And then the price didn't care. It kept going up to about 440, 445 or so. We got a little bit of FOMO the next couple days because of that, but not nearly enough to be up in these levels to justify the prices we were at. It actually needed to be higher than these bars because this bar was way down when the price was at 335, and then these bars weren't even close to up here, and the price was almost $100 more than that. So it was very, very bearish at this time. And when it got up here, I was really surprised, and I'm like, man, is the model just not, doing what it's supposed to? But it turned out, it was just a lot of noise and FOMO, and people who were buying in at the top pushing the price up to almost 500 before DAA eventually said, no, guys, this is not where we should be at with the price, and the price plummeted. So that's where we are with the two main assets. You can, of course, use this model for anything else, or at least the 25 or so that I have on this model right now. We're putting more on all the time. We have a limit on how much we can put on because it does cap out with how much bandwidth it's using due to the limitations of Google Sheets. But in terms of the most important ERC20 projects out there right now, or at least the top market cap ones, we have most of them covered, as well as Ripple, Litecoin, BNB, which isn't shown right here right now, but quite a few different models. And right now, a few other standouts. Lend predicted we'd get quite a big bounce after the dip last night, and that happened pretty much right away. I think it's up 20% or even more since that dip. And a couple other notables, you want to look at Link right now if you really believe strongly in some immediate impact from these models. Just keep in mind there's going to be a little bit of lag sometimes, but we are starting to get some bullishness for Link again, not nearly at the neon greens that it was seeing on this huge run up, but given enough time, if we keep seeing greens for Link, we'll see a nice recovery there. And I'll segue into token age consumed for Link while we're talking about it. Not Elrond, there we go. So I'll full screen here really quick. And this is displaying the last 6 months of token age consumed, which is taking the amount of dormant coins multiplied by the time that they have been sitting in that wallet before being moved. And we had a almost 1 year high. If I go out, I think the last largest was something like 8 months ago. No, it was actually longer. Let's go back to 2018. Yeah, so this was the highest since July. So about July 2019. So about 14 months ago was the last time we had a spike of this caliber. And it's basically telling us that a lot of dormant coins have been moved, and it tends to correspond with a big move. In this case, it corresponded with a down move. However, I don't necessarily think this is a bearish spike. I think that generally these token age consumed spikes happen of this size when a price direction is going to happen. And I see that the price was already starting to plummet, and it happened at the tail end of last night's dip, telling me that even though the price went further down as the rest of altcoins did, this one happened with the intention of some major wallet buying a dip. And I can't guarantee that that's exactly what's going to come because it's dependent on so many other assets. But generally, when it happens at the tail end of a downswing, I see an upswing in price eventually. So you're going to want to watch what's happening down here and see if it starts to recover. Alternatively, if more commonly, in my opinion, these token age consumes happen on the way up. And that's when you'll see a correction like this happen right after it. But in this case, since it was on its way down, my prediction personally, and obviously this is not investment advice, we'll see some sort of attempted recovery, and I don't know how it's going to actually play out, but that's the more likely scenario based on this major token age consumed spike. And we'll keep you in the loop as far as what this token age consumed spike means and if there's any following ones over the next few weeks. Last thing I want to show before I send it back over to Dino is Bitcoin and its correlation to the S&P and the price of gold. As you can see, there's been a pretty heavy correlation for all three. Bitcoin's had a little more of a correlation to gold, and that seems to get the majority of the attention, but it's not ignoring what the S&P is doing either. And over the last couple days, I'm going to highlight just the last month and see if this keeps it. Yeah, that's a pretty good illustration. Now keep in mind, they're starting at different starting points. So it's not quite like TradingView where you'll just see the end result as the true percent changes over the course of the time frame I'm showing. But you can see pretty clearly that gold's price dropped pretty significantly. Let me full screen it again. Pretty significantly on the second, a couple days ago, and Bitcoin's price dropped along with it. It attempted to recover just as Bitcoin did. They followed each other quite well. And then Bitcoin actually plummeted yesterday to go along with the S&P's drop. So it's almost like it's splitting the difference a little between gold and S&P. And a lot of people believe that there's zero correlation between Bitcoin and gold. That's definitely not the case. We've seen plenty of evidence to indicate that there is a lot of following of gold, that it's actually being led by gold, and Bitcoin does what gold does, especially over these past 6 months since Black Thursday. But it does have zero correlation historically compared to the S&P. But over the past 6 months, since these pandemic fears have kind of taken over, there's been a lot more pegged to it. And when Bitcoin is able to break out best, as our founder Maxim has indicated in a few articles in the past, that's when it is not reliant on what the S&P is doing. Right now, it appears that there is quite a bit of reliance still. And if the markets, the US markets are crashing, the crypto will take a hit as well. Once that's not the case, and we'll see like a really red day in the S&P, but Bitcoin doesn't budge, that's a clear sign that we might be rising again. And we did have days like that. If I go back a little further to like some July dates, I know that the S&P was struggling while Bitcoin was, yeah, like here, for example, we had a huge red day, but Bitcoin didn't care. And right afterwards, that's when we had its big surge. So that's what you want to look for. If there's a divergence between the S&P dropping and Bitcoin either staying flat or slightly rising, that's a sign that future days are going to be bright for Bitcoin, based on history over the past 6 months. And there may be less and less correlation as we get to the end of the year here. But keep in mind this one, you can simply just put in Bitcoin, go to compare, put in gold price, S&P price, and this chart will pop up for you. And I might even have a tweet out later today that sort of illustrates it. But pretty interesting stuff happening in the markets, guys. And I'm anxious to see how it plays out. I'm particularly interested to see if this DAA divergence model predicts a bump, a bounce in price correctly over the next week or so, or we may just see a FUD start to occur and DAA drops off, and then we may go red again. But right now, as it stands, it looks like a sustained bounce could happen in a small respect. So stay tuned, guys. And I'm going to send it back to you, Dino, at this point.
All right, great stuff, Brian. Thanks a lot. Guys, we're going to be talking a little bit more about the Bitcoin and Ethereum, because I think there's quite a lot of meat to cover, just given the recent market action. But after I blabber for about 10 more minutes about some cool stuff that I found, we're going to be taking audience questions. So I see already a few requests in our live chat about different coins that you guys would like us to analyze. We will do impromptu analysis on several different coins in about 10 minutes. So anything that you are interested in from a more of a fundamental perspective, if you're interested of a bounce back potential for a specific coin based on its current on-chain and social activity, let us know and we will cover that after I'm done talking a bit more about Ethereum. So obviously, I think a lot of people are now kind of tying this latest dip with just the general global financial conditions. The S&P index is down, Bitcoin and the entire crypto market is down as well. So it seems like it's not like it's not an isolated move from the crypto market. So that needs to be kept in perspective. But that doesn't mean that there wasn't a lot of pain felt by a variety of important stakeholders in the Ethereum network. By the way, Brian, I think you're still unmuted, so I can kind of hear you, hear some static. So if you don't mind muting yourself in the meantime.
I got you. Yep.
Okay, cool, thanks. All right, so I'm gonna talk a little bit about some pain that I've been seeing on Ethereum's charts over the past couple of maybe 2 days. Okay, so we wrote a report about Ethereum on Monday saying that its fundamentals were looking good. We wrote about it when it was like here, I think, before this this uptrend, saying, you know, for starters, its speculative activity was looking very healthy. So here I'm going to first of all look at the amount of daily active deposits, basically meaning that what we're looking at right now is the amount of addresses that are being used to funnel Ethereum to centralized exchange wallets. So when these addresses are active at a higher clip, basically when you see a spike in Ethereum's daily active deposits, then what that means is that more and more people are sending their Ethereum to exchanges. Presumably, especially if that is happening during a rally, some of those people might be using this opportunity to sell and to take some profit. So when we were talking about Ethereum in our latest report, we were looking at the conditions around here, and we were saying, oh, okay, cool. Ethereum's speculative activity is dropping. There doesn't seem to be a lot of or abnormally high amount of daily active deposits. Basically, people don't seem to be too interested in selling their coins for the time being, and I think that's one of the reasons why we saw this bounce back here above 400 once again, is because there was enough sort of room to grow given the reduction in sell pressure. Well, a lot has changed in the last 48 hours, guys. We're seeing quite a few spikes in the exchange metrics for Ethereum, which indicates that once again, speculators seem to be fleeing the market for the time being. Not a whole lot of them, but definitely an uptick from the normal sort of day-to-day activity. So first of all, obviously during the last couple of days, and especially on September 2nd and September 3rd, we've seen a definitely noticeable spike in the amount of addresses moving Ethereum to exchanges. And then simultaneously, we have seen quite a rise. Let me use a different color so you can see it more clearly. Maybe something a bit nicer. Okay. Um, we've seen quite a rise in Ethereum's exchange inflow. And this is even going up until today or until this very moment. So basically what we're seeing here, and you can see a similar spike right before a consolidation here, we're seeing more and more Ethereum being moved to exchanges even after we dropped below 400. So to me, this is signaling some sort of a panic among some speculators that Ethereum might be poised for an even higher correction. So they're experiencing pain and they're flocking to centralized exchanges to take some profit while they still can. So obviously, you know, in short term, this might not be the greatest thing in the world. But as Max, our founder, likes to say, there needs to be some pain felt among market participants in order for, the market cycle to kind of refresh itself and for us to have an ability to push upward once again. So the first sort of pain that I wanted to show on the charts is speculative pain. There definitely seems to be an uptick in the speculative activity for Ethereum. Just look at these spikes over the last couple of days. Undoubtedly, a lot of people are moving their coins to exchanges, and I would assume a lion's share of those moves are, people moving their coins to sell. Okay, this is the first sort of pain that I wanted to show. The second pain that I wanted to show is the pain of long-term holders. All right, so there's a few different charts here or metrics that I'm going to show you. Number one is Ethereum's age consumed. So what this metric tracks essentially is the amount of previously inactive Ethereum coins that are being moved on the network. So when you see spikes in Ethereum's age consumed, what you should basically read that as is long-term Ethereum holders, some long-term Ethereum holders, and veteran Ethereum investors are starting to move their coins on the network. And usually they don't do that without properly analyzing market conditions and without sometimes even being in the know about what's going to happen. So we saw these massive spikes here before the top, but also this a major spike in Ethereum's H consumed after the top, indicating that long-term holders, at least some of them, might be looking to exit their holdings for the time being, or at least reduce their positions. Let me show you dormant circulation for Ethereum as well, so you can kind of see spikes in there too. So a big spike here. I think this was some long-term Ethereum holders looking to maybe at these points take some profit, and I'll show you one more reason in a minute why I think this is the case, where long-term holders were looking at this particular point in time and saying, okay, I think this is my exit point for the time being. But there's been another significant uptick in Ethereum's dormant circulation and H consumed just today, indicating that a lot of long-term, previously idle or inactive Ethereum coins are being moved on a network. And if we kind of coincide that or correlate that with this spike in exchange inflow, there seems to be some pain being felt by long-term investors that might be looking to get out of Ethereum for the time being. So once again, some pain definitely being felt on the charts. Now I will finally look at Ethereum miners as the last sort of stakeholder that has been feeling some pain, it seems. Well, this isn't necessarily pain. This is more of how generally Ethereum miners tend to impact the price of Ethereum. So usually what we look at when we're talking about Ethereum is their balance over time. Here, however, we're looking at a change of balance of the combined balance of all Ethereum mining pools. So essentially what you're seeing here, these drop-offs, these massive drop-offs, these are the times when the amount of Ethereum moving away from Ethereum mining addresses has spiked. So you can see it very often correlating with interesting or sort of volatile times in Ethereum's price action. So we see a lot of Ethereum moving away from Ethereum's miners here at the top before the correction. Here, obviously pointing to capitulation during the Black Thursday crash. We saw another major movement or outflow of Ethereum from miner addresses before this consolidation, or right at the end of the Ethereum rally here, up to 240. And we've seen it several times since. So here, before this minor correction or consolidation here, we've seen it before Ethereum started consolidating around the 440 mark. And then finally, the biggest drop-off in Ethereum miner balance since the Black Thursday was recorded right before we dropped. So if you can actually see it here, it was right around here as Ethereum was climbing about 470. So this seems to be, quite an uncomfortable point for some miners, or at the very least, they were looking to take some profit and maybe, kind of finance their day-to-day operations at this point. But given the price activity or the context of the timing at which they started selling off their Ethereum, it obviously kind of coincided with the forming top for Ethereum as well. And since then, we've kind of just tapered off. So very often, the point that I'm trying to make is that very often you're going to see significant moves by Ethereum miners coinciding with short-term price volatility for Ethereum in particular. The chart doesn't lie. Like pretty much every spike that I'm showing here has occurred either at the very top or at the very bottom of a local Ethereum cycle. So definitely a chart to keep in mind and keep track of on Sandbase as well. Okay, now I will, however, say that even though a lot of pain has been felt among a variety of Ethereum holders, there definitely are some hopeful signs for Ethereum's recovery from this point onwards. I'm going to show two of them. Number one is Ethereum social data. This is showing Bitcoin, but we are going to switch it to Ethereum. So Brian has shown you some social mentions of Bitcoin, I think in particular. Now what I want to show you is the actual mood of the crowd towards Ethereum at this point in time. So we're here looking at the average crowd-related sentiment about Ethereum over the last 2 years on crypto Twitter in particular. You can change, the source of information that you want here. We track over 1,000 different crypto social media channels, but usually the Twitter data is most reliable because this is what we have built our algorithm upon. So we've seen, generally speaking, we've seen these massive spikes in bullish sentiment. Obviously, zero basically points to sort of ambivalent feelings about Ethereum. These rises or spikes upward show these sort of extraordinarily or increasingly bullish sentiment towards Bitcoin, and these drop-offs point to extraordinarily or increasingly bearish sentiment towards Bitcoin. So usually what we have seen is that these spikes in bullish sentiment tend to coincide with local tops for the coin in question. You can see that happening both times in 2019, happening here in February of 2020, and happening here before this correction of Ethereum after it crossed 430 here for the first time in I think about a year and a half. So there was basically a huge sort of spike in Ethereum's bullishness. A lot of people, I think, were very high on ETH just because they thought that the DeFi activity and the proliferation of DeFi protocols hasn't been accurately priced in, and therefore a lot of moon talk and moon boys were coming out of the woodwork. So I think this is also what contributed to this fall in Ethereum's price below 400 once again. But since then, and over the past week or so, we have been now back into the bearish territory. So on average, Ethereum related sentiment is bearish at the moment, which is might be counterintuitive, but is usually a good sign for Ethereum's short-term price action. Because if you look at the chart historically, usually the points at which we start bouncing back, both for Ethereum and I can show you for Bitcoin as well, the charts are pretty much copy-paste, is usually the Ethereum rallies originate from a predominantly bearish atmosphere. You can see that happening here in June 2019, happening once again in January before the price rally for Ethereum, obviously happening after the Black Thursday dump, and then here as well during Ethereum's consolidation, where more and more people were thinking that the consolidation is going to end in a downtrend. Once again, we saw Ethereum's rally originate from a predominantly bearish condition. So currently, the fact that we are, or that the crowd, more accurately speaking, is relatively bearish toward toward Ethereum is generally something to keep an eye on and to be optimistic about. I would personally like it if we could go a bit further down. Maybe to these sort of levels that we've seen often in the past. I think this is still relatively ambivalent, but if we see another sort of drop off here in Ethereum sentiment, I think it's a very good sign for the short and midterm price activity of the Ethereum network. Now, one other point that I will make about Ethereum's sort of conditions at the moment is its MVRV. So MVRV, for those of you that are unfamiliar with this metric, tracks the average profit or loss of a specific group of holders. So at this moment, I'm looking at the MVRV of all of the Ethereum that have been acquired in the past 30 days. So this is basically the average profit or loss of all of the short-term holders of Ethereum. So we can see that here during the top here on September 2nd, the short-term holders were about 14% in profit on their initial investment. That's what 1.14 MVRV points to. Now, usually, as a rule of thumb, the higher the MVRV gets, the more likely it is that we are going to be seeing sell-offs as users and market participants start to take some profit and offload their bags. Now, the lower the MVRV gets, as a rule of thumb, the less sell pressure there is, the less sell incentive there is, because people are not making profit on their initial investment, right? So at the moment, the short-term holders are about 9% in a loss on their initial investment, at a loss on their initial investment. So at this point in time, we're not really seeing a whole lot of reason for short-term holders to start selling their bags, which is usually a good point in time. So as you can see historically, these drop-offs in Ethereum's MVRV are usually opportune times to start accumulating. Obviously, this is in no way financial advice, and I think just the fact that the short-term money is just now below break even is not a strong enough signal for me. I would like it to go even a bit further down before saying, okay, there's definitely a strong bounce back possibility. But if you look at Ethereum's historical MVRV charts, usually these drop-offs in MVRV do tend to coincide with opportune times to accumulate, right? Now, one other thing that I wanted to show that I thought was quite interesting for MVRV and Ethereum is Ethereum's 365-day MVRV. So here we're essentially looking at the average profit or loss of long-term Ethereum holders. So all Ethereum that has been acquired over the last 365 days. So one interesting note that I found here. Let me take a different color. Okay, sure. So what I found interesting here over the last couple of weeks specifically is that there have been several spikes in Ethereum's 365-day MVRV. In fact, both of these spikes were peaking at pretty much the same rate. So on the August 14th top here for Ethereum, when Ethereum was about 435, I think trying to break 440, the average profit of long-term Ethereum holders was 88%. All right. And then we went back down and we since then climbed all the way up to 480. So pretty much we got about $40 more in Ethereum's price action. However, the general or the MVRV of 365-day holders has peaked at pretty much the same level. Once again, 188. So even though we climbed a higher high as far as the price is concerned, the MVRV stopped or peaked at pretty much the same point. So it seems like at this point in time, around 90% profit is usually a danger zone for Ethereum's long-term holders, at which they are looking to offload some of their holdings and start exiting the market for the time being. Now we have since then kind of declined into 147. So about long-term MVRV, long-term Ethereum holders are currently about 50% in profit. Even though we have dipped, I am not feeling super comfortable still around about Ethereum's MVRV level. So as you can see, historically, this is still quite high. Both the tops in June 2019 and February of 2020, both of those tops actually peaked at a lower MVRV rate than where we are now. So, the long-term Ethereum holders are still quite in profit, which is not necessarily great because there's still incentive to sell if they want to, if they see opportunities. So there's definitely something interesting happening with Ethereum's MVRVs, especially the 30-day one, which is looking a bit more promising, just given the fact that we are now into break-even territory and even a bit lower than that. Pointing to the fact that for the time being, short-term holders are probably not going to be exiting the market in bulk. Some of them, I think, already have. So for now, I think they're going to be probably just sitting on the sidelines, waiting for the price action to bounce back. So that's as far as what I wanted to show, some additional points about Ethereum. Now, let's go into a few different coins that we have been suggested to in the chat, and we can then close off the stream with that. I think I've seen a few different people ask us about Band, right? Let me see, there was one.
Yeah, a couple bands, Synthetix.
Okay. By the way, I mentioned last time, guys, just a quick update. I mentioned last time when we were talking about Band, somebody asked us about Band last time as well. We are currently setting up an interview with the Band protocol team. So I'm hoping to have more information about this early next week when I'm setting up a call with their product and business growth manager. And we are going to be setting up a stream and asking them all the different questions that we want to know about what is up, what is next for the Band protocol, what is next on their roadmap, and generally, I think just how they view Chainlink as a competition and where they think they differ, and how the DeFi space and the DeFi proliferation has helped the Band protocol blossom as well. So there's going to be a lot of talk, probably about an hour interview. So we're going to, if you have any specific questions for Band protocol, we are going to ask you to put them in writing. So anyone that is following us on Discord or Telegram, reach out to us in our trading channels and just let us know what you would like us to ask the Band guys, and we'll do that during our interview. All right, anyway, let's look at a few Band protocol related fundamentals. So obviously, once again, this latest drop off, clearly just market-wide conditions, nothing I think that's necessarily endemic to Band itself. But let's look at, okay, so once again, we're definitely seeing some pain points here so there was a spike here before the correction, but in exchange inflow. So there seems to have been even some elevated selling pressure for band, even despite or regardless of market conditions. I think we might have seen a short-term correction, as you can see here, happening several times in the past as well. But since then, definitely an uptick in the amount of band being moved to exchanges. If we look at the coin supply on exchanges, maybe that's going to show us a better picture. Yeah, there we go. Okay, so no, I don't like that color. Let's take red. Nope. All right, better. So we've seen the supply of band on exchanges go from 2.15 million here up to 3 million, 3.1 million here. So that's quite an up. Is that like about $1 million worth of band being moved to exchanges at this point in time? And then since then, I think there's been a sort of a downtrend, but even though I still see a spike in exchange inflow for band. So I would say definitely there's an elevated sell pressure for band even before the correction, but especially during the correction, which might be the case for a lot of coins. I think people that are thinking that Bitcoin and Ethereum are going to dump further are also going to dump their altcoin bags for the time being. So not really surprised. Obviously, I would wait until this sort of exchange inflow metric starts to normalize. What you want to ideally see is these sort of like just quiet levels for band's exchange related activity, pointing to the fact that there's not a lot of increasing sell pressure. Yeah, so as you can see, if we look at the band related deposits, it paints an even better picture. So here we saw the amount of addresses being used to funnel bands to exchanges peak around band's latest stop. And since then, we've kind of, tapered off, went back into our pre-pump levels, which is fine. It's a sort of a good place or a good zone for band speculative activity to be in. Over the last couple of days, and even after band started dropping, and this is, by the way, still, I think, calculating, the last day bar is still being calculated, so it's probably going to jump even higher at the end of the day. Over the last couple of days, we've seen a major rise in the daily active deposits for band, pointing to the fact that a lot of people, or definitely an increased amount of band, is being moved to exchanges as the people are experiencing some short-term pains and are looking to offload some of their positions. Not a great sign, but obviously I think, once again, you definitely need to have these types of pain points, and after they stabilize, I think it could be a good point for another market-wide bounce back. So let's look at obviously some speculative activity is rising for band, but what is its on-chain activity looking like? It's looking very strong. So let me put this in perspective and look at the last year of data. So I mean, when you see something like this, it's definitely an optimistic sign for a protocol, right? So since its inception, we have seen the amount of addresses interacting with the band token continually rise. Obviously, this has a lot to do with the price action as well. You can see the spikes in bands, the daily active addresses kind of coincide with the spikes or the rallies in their price as well. But in general, it's definitely a good sign for an asset to see this amount of activity on the network, regardless of whether it's only utility driven or only driven by speculators. Just the fact that the coin is being utilized and there's interest in it is definitely a good sign. Now, the amount of addresses here spiking, I think, is likely due to a bunch of speculators also being interested, because if you look at the daily active deposits, I think they spiked in unison here. Yeah, so you can see basically exactly the same spikes almost. So I would say that some of these spikes are definitely driven by speculators exiting the market. But even with that in mind, we can see that on average, the amount of people interacting with the band network continues to rise. It's pointing to some strong fundamentals over the last couple of months. So in the midterm, I would definitely consider that to be a good sign. As far as band's transaction volume is concerned, we are seeing quite an uptick over the last 2 days. I would once again probably assume that this is having to do with some people exiting the market for the time being and moving their coins to exchanges, because if we correlate it to the exchange inflow metrics, they are basically spiking in unison, as you can see. So very likely, in my opinion, these spikes in transaction volume coincide with spikes in exchange inflow, meaning that people are starting to move their coins at a higher clip to exchanges to sell. All right, let's see if there are some spooks among Band's long-term holders. So I want to see what the sort of hodlers for Band have been doing recently, if there are any spikes to speak of. Dormant circulation, maybe? Nope. Okay. Let me see if maybe it's okay. There we go. So I needed a shorter time frame. Okay. A few spikes here. Nothing too out of the ordinary though. There's not like a string of spikes pointing to a network-wide distribution. Definitely a few guys, a few long-term band holders actually looking to offload their bags at the top. Since then, we haven't really seen any sort of elevated activity among long-term band holders, which is good. Usually what you want to see is you want to see people that have been invested in a coin for a long time start and continue to hodl and accumulate despite market conditions, especially when you're looking at a downtrend as we are for Band and pretty much every other coin on the market at the moment. So a good sign that we are not seeing these massive spikes in Band's dormant circulation over the past 24 to 36 hours as well. And finally, let's look at Band's MVRV just so we can see where we are at the moment. So first I want to look at what the short-term holders are doing or where their average profit or loss is. So it was up to 190% here and about the same here. So you can see once again, similar to Ethereum, even though the price is risen, the MVRV peaks at pretty much the same time. So this points to, these levels being usually the levels at which these particular groups of holders are comfortable with, selling their positions and taking some profits. So at this point in time, Band's holders were about 190% in profit. And then at the same time, pretty much here at the all-time high for Band, the short-term holders were once again about 180% in profit. So the profit margin hasn't changed, and that's usually the point at which we should, consider to be in a danger zone for Band's price action. Since then, and currently, okay, we've dropped below break even. So 0.84, that means minus 16% for Band's short-term holders. Good. I mean, not great for Band's short-term holders, but good for the market action in general and the fact that there's not going to be a whole lot of sell pressure or incentive to sell among short-term traders. As far as the long-term Band holders are concerned, let's see. I mean, they're still crazy in profit. So, I'm not really sure what to make of it. They could start selling at these points or continue to sell, but they're still like 680% in profit. So although they're feeling some pains, at the same time, I wouldn't be surprised if they believe in the project. I wouldn't be surprised if they continue to hold, even if we drop off lower. Overall, I mean, Ben, at the moment, Ben's looking kind of bad just because of its exchange activity. Obviously, we're seeing quite a spike in people moving away, moving their coins to exchanges looking to sell. Not great, but I think that's going to happen with most of the coins that we'll look at, right? As far as its fundamentals, it's looking strong. As far as its profit or loss margins, we're at a point where there's not a whole lot of incentive to sell. Overall, just wait until the exchange metrics stabilize and then maybe look into getting into Band if you want. Obviously, not financial advice. All right, let's see. Is there anything else, Brian, that we can get into? Let's see.
I'm Synthetix.
Okay.
YAM, Wi-Fi, a little bit of DOT. I would try Synthetix since we have plenty of data on it.
Right. So I've been looking at Synthetix data before the call, actually. So as far as Synthetix, interestingly enough, the actual deposit activity has been declining recently. However, the exchange inflow is painting the same picture as we've seen with Band and Ethereum. So here you see, actually, let me put it. I mean, this is pretty good context. This is a year and a half worth of data. So you can see some of the biggest spikes in Synthetix related exchange activity here over the past couple of days. I mean, first of all, it happened here during Synthetix is top. So I think that we would probably see a short-term correction for Synthetix regardless, or either way, because there's a lot of sell pressure happening here. But even still, over the last couple of hours, or in maybe last 36 hours or so, there's still an abnormally high inflow of Synthetix to exchanges. Now, even though you're seeing, this is why it's important to look at a bunch of metrics at the same time. So you're seeing a declining deposit activity, but the exchange inflow is rising, meaning that even though it's not a market-wide trend, or it's not the fact that people are a whole lot of different users and addresses are moving Synthetix to exchanges. That's not what's happening. It's a concentrated amount of addresses, probably a small amount of users looking to move their coins to exchanges at the moment. By the way, Brian, I think you're unmuted, so there's some noise coming from your end.
Got it.
All right, let's look at SNX's general activity. I mean, once again, anything that's going to have to do with DeFi is going to look pretty great over the last couple of months. So the daily active addresses are rising like crazy. We have definitely seen a familiar setup here. Let me zoom in so you can see it a bit better. Very often, like this is what Brian says means by saying the price daily active divergence. So we have seen kind of the amount of daily active addresses rise alongside the Synthetix's price action, and then we have kind of seen a decline, even though the price was trying to push upward. But when it tries to push upward into this sort of declining price action, it usually finds itself at a very precarious and difficult position. But even though the amount of daily active addresses has kind of been declining, it's still very high. Like, guys, this is almost 1,200 addresses being utilized on the Synthetix network, or 1,200 addresses using or interacting with SNX on a daily basis. As far as ERC20 coins are concerned, there's only about 20 coins or so that have more than 1,000 daily active addresses on average over the past month or so. So this is definitely still in the upper echelon of coins, right? So I would say, in general, Synthetix's on-chain activity is still looking quite high, quite okay. Its transaction volume is rising as well. I would definitely say that this sort of latest spike in transaction volume is probably speculative driven. So if you look at exchange inflow, it's probably, correlating pretty nicely. But even so, definitely an uptrend in the general amount of Synthetix being transferred on the network and people interacting with the coins. Always a good thing to have happen. Now let's look at exchange age consumed and dormant circulation as well. By the way, I'm just using a couple of metrics. There's a whole lot of stuff additionally that you can play around with on our platform. I just, for the sake of brevity and for our time constraints, I'm just going to look at 4 or 5 different metrics instead. So yeah, there's definitely been a bunch of spikes in dormant circulation and age consumed over the past couple of months. I think just in general, as SNX has started to grow, more and more long-term holders were looking to exit their positions. We can see a pretty big spike in dormant circulation here before the correction. Not a whole lot happening over the past couple of days, which is good. Once again, seems like SNX's long-term holders are not really responding to this latest drop-off. They seem to be sitting on their backs for the time being, which is what you want to see. Okay, let's look at MVRV finally. So the short-term guys or new money is currently about 14% in the loss, and this is going to be market-wide. So I honestly don't think that we're going to be seeing a whole lot of sell-offs for the time being among short-term holders. There's just not a whole lot of incentive to do so. And then if you look at the 365-day ratio, we've definitely declined, which is always good. Like I said, in general, the lower the MVRV, the better. However, the 365-day MVRV is still relatively high. Like long-term SNX holders are about 130% in profit at the moment. Now, is this a danger zone? As you can see, usually where we tend to peak is between, what is this, like 416, 380, 345. So between 250 and 320% profit is usually where we've seen Synthetix kind of peak as far as its long-term holders are concerned, as far as their profit margins are concerned, before they start kind of selling off parts of their bags and we see a correction. Now, at the moment, we're all the way down to 140%. but I once again, ideally, I would like to see this sort of MVRV ratio dip even further, maybe like into this territory, like around 1 or even below break even, before I can say, okay, this is definitely looking like a good time. Like if I'm seeing the long-term MVRV drop significantly, but SNX's on-chain activity is still very high, and it seems that the network is being utilized and is being respected, and there's a lot of interest among both speculators and just general market, I would consider that to be pretty fertile ground for its midterm potential. So looking good overall, I guess. I wouldn't definitely. I would definitely wait until we see these types of exchange metrics stabilize a bit, similar to what I said for band as well. Like just wait a few days until we see where people stop selling. Maybe the pain has been felt, and on average the people are content once again with starting to accumulate and not moving to sell, and then maybe look for an open position. Okay, let's look at social volume as well for Synthetix. I'm wondering what the crowd is looking like. Okay, very interesting once again. So what you're seeing here is once again the amount of mentions of Synthetix on the crypto social media over the last, let's say, last year or so. Yeah, okay, and let me take a longer interval, 1 day interval. Yeah, there we go. Okay, so similar to daily active addresses, the amount of mentions of Synthetix on crypto social media kind of spiking alongside its price action. It's peaking here before the correction, which is something that we see very often. In general, like you can see it here, it doesn't look as impressive because of Synthetix's price growth since, but usually extreme levels of social mentions tend to coincide with short-term corrections, especially if they're short-lived, as they have proven to be here. So usually what this means is that the FOMO crowd is coming in. There's a lot of irrational confidence about the market performance of this particular coin, and as the attention of the crowd starts to dissipate, and the interest from speculators moves to different coins, the price action is no longer able to support itself and starts declining as well. So currently we're at relatively low levels of interest for Synthetix, but I mean, usually I think at these points in time, most of people are talking about Bitcoin, Ethereum, general market conditions. So it's not surprising that we're not seeing a whole lot of talk about Synthetix in particular. But this is where you want to be as far as the crowd activity is concerned. You want to be at these low levels, sort of undervalued positions. Not a lot of people talking about a coin, not a lot of people paying respect or attention to the coin. Usually is the place where you want to be before we get here, right? So this is usually a good time to start accumulating when you see these types of low levels of social activity. Let's finally look at its social sentiment. Synthetix. Okay, once again, a good sign. You see the, so if you were paying attention to what I mentioned about Ethereum in the past, I mentioned that these high spikes in bullish sentiment are usually a no-no. They're a danger zone for any specific coin because they point to overvalued conditions and the crowd being irrationally confident about the market for this particular asset. Since then, we've seen sort of the bullishness kind of coincide with a correction and lead to a price drop of here and the retreat of Synthetix. But since then, the sentiment has been dumping all the way into bearish territory. So currently we're just dipped below sort of ambivalent into bearish territory, meaning that on average, the Synthetix related sentiment on crypto social media is bearish, which is good. That's what you want to see. You don't want people to get overhyped about the coin, giving whales opportunities to sell and dump on the congregating crowd. What you want to see is these low levels of both social activity and expectations towards the coin. And when you kind of combine that with strong fundamentals like its general on-chain activity and low speculative activity, which you would look at by checking the exchange metrics here, that's usually a good, interesting point to consider getting into a coin. Okay, I think we are going to end it there, guys, because it's been more than an hour since we've been live. I want to thank everybody that's joined our call, everybody that's asked us questions. If you have any additional questions that you want us or coins that you want us to look into, check out sentiment.net and go to our Discord. So there's a link in the description of this video to our Discord channel. There's a trading channel there where we talk about this stuff daily. So anything that we haven't had time to cover in this edition, just ping us on our Discord, and we'll be more than happy to help. Finally, check out app.sentiment.net. So this is the main market intelligence platform of ours. Everything that we talked about, even Brian's templates, are available for Sandbase Pro users. There's a 2-week trial where no credit card needed, where you can play with all of these metrics and other tools that we have developed. After that, it's only $49 a month, but you get 2 weeks to just play around with the data and feel how powerful it is and whether you want to keep using it for your market decision making or not. If you do, once your two weeks are up, you can use TWIC. So TWIC during checkout. This is a code meaning this week in crypto. Basically, everybody that is watching these streams can use this code at the checkout and get 25% off their first billing cycle. So if you like what you see on our platform, if you're liking our metrics and tools and you want to keep using them, you can use this code to get 25% off your first billing cycle, whether that's monthly or a yearly plan. All right, I think that's gonna be it. One final request, guys. If you liked what you heard today and you would want us to make more of these videos, please, first of all, leave a like to this on this video and subscribe to our channel. If you don't mind also leaving a comment of sorts, everything helps for us to kind of tell YouTube's algorithm that we are producing quality content and that we would like more viewers. So yeah, thank you everyone for listening, and I'll talk to you all in 7 days.
Appreciate everyone joining. Thanks, guys. Have a good week.